What's up and welcome to today's recap video. So it's been a minute since I've done a recap video on YouTube. I think it was October, November time. I think it was the CAD yen trade that I did a while back. So it's definitely been a while. I've definitely wanted to bring these back to the forefront of the agenda for YouTube and just include a lot more within the content to vary things up a little bit and to give you some real value in terms of why I've taken certain trades, any lessons, any mistakes that I've made as well, and just to share any lessons, any takeaways, so that you can see that some of the trades that I do take as well. So it's gonna be good, but give me your feedback down below in the comment section if you do want to see a lot more of these trade recaps, because I am thinking about contemplating bringing these to the forefront of the agenda for YouTube again. So let me know if you would like that. Let me know if that would provide value to you. Not so much for experienced traders, but for more so the people in the beginning stages to understand the thought process behind each and every single trade. So with this one, as you can see, a little bit of a different pair. This is not a currency. So this is the US NAS100. I've only taken a few trades on this recently, but prior to that, I'd never taken a single trade. What I basically did is that we had this structure, as price was forming this structure, I was eyeing up an entry in these points, spent a little bit of backtesting sessions on this and just got to grips with the behavior of this pair. Now, in terms of the trade itself, this resulted in a 1% loss for myself, but there was a missed trade that I didn't capitalize on that would have banked me around about 2.5, 2.6. So definitely a slap on the wrist for myself, something to learn from, something to really dig into that I have been paying attention to recently. So what was that? So particularly this entire trade, what was I looking at here? So we had this textbook reversal structure. These are my go-to. You guys already know that from things like Euro Pound, Pound Dollar, Kiwi CAD, trades like that I've covered in the past. These are my go-to. When these happen in the market, I'm fully on the ball with these trades if it's on my watch list. So we had this 1-2, price created this third touch, but we almost created this lower time frame structure as well to back up the higher time frame structure. So this was nice in itself. Now what I was looking for here is this area of value here. I was looking at this area of value for a potential selling opportunity, ideally a clear rejection or clear ascending formation to then get short on this. So as price started to play out, this was later in the day, I believe this was 5-6 p.m. UK time, and it was here. So I was looking at this, I wasn't at the charts at the time of this trade. Price did get to this area of value a little bit quicker than I anticipated, and I was looking at this overall nature here as pretty impulsive too. So if we just take a look at that and just focus on the nature of price there, it's a little bit impulsive compared to what I did, essentially want, but this comes down to the lesson of not enforcing any beliefs on the market and taking a message from what the market is telling me. We had that 1, 2, 3. It was a typical textbook go-to setup. I shouldn't have been waiting for perfection, but I did. So once again, definitely a lesson for myself. But I'm still learning, still refining, still working on different things. I do have my plan nailed down now. I have reined it back in, filtered out a couple of different setups that I did have in the past, and now I've just got it pretty basic, pretty inclined with how I like to trade and my total style. So it feels good now, feels good moving forward. But in terms of this trade, I would have taken this as a entry from the top. So there's two ways you could take this. So you could either take this with around about a 70 pip stop, targeting this area of the bottom of the structure here for around 2.36 to 1 risk to reward, and then the bottom of the structure for 8%. A little bit more ambitious on that side, but at the same time, if these trades do commit, like if we just cast our eyes to what happened previously with this price action, then these trades can be very lucrative. You can see how they do play out quite frequently. So I was looking at that. There is a refined entry on the 15-minute chart as well. So if you want a tighter entry, I could have pretty much got involved in this trade with a tighter pip stop, allowing me to get in with probably 50 pip stop or 40, depending on your aggressive nature. But that would have been an entry for myself. But even just taking it off the 1 hour close, if we just take a look at this, 70 pip stop, as you can see here, 70 pip stop, 2.22 risk to reward to here, 2.4, and let's just go off that. So I would have taken it there. Price would have tagged me in, start to move to the downside, and then start to correct back up. Now this would have been very, very close to taking me out for the 1% loss. It's arguable with the spreads, but I believe that would have still kept me in. If we just take a look at that, if we measure that high to the stop, it's around about a 13 to 40 pip spread. So unless it was super high spreads, it wouldn't have taken me out, and then it would have moved to the downside in the late hours of the next day. So that would have been nice. And then how I would have managed that is that as soon as price started to pull back, I would have been, if we just rewind this a little bit, at this point, because this was a short-term play within my mind, I would have anticipated more of a correction. If we just start to play this out, if we just grab this price action, I would have anticipated more of a correction to then continue moving to the downside. But then also, if price was to pull back and we start to get, this sort of price action where we start to pull back, am I willing to give profit back to the market? No, which is where you have to have a line in the sand. For me, it would have been around about 2.7, 2.6. I think I got it narrowed down within my ASR as 2.6, so we'll go with that. And then I would have been taken out here for 2.6% profit. But instead, that was a mistrade within my plan. Definitely a slap on the wrist, but something to learn from as well. It's so easy to, when you make these mistakes, to be like, okay, it is what it is. There's so many different trades, and that's true to a certain extent, but you do need to dig into it. You do need to learn from your mistakes. So for myself, it was, stop waiting for perfection in a key area of value. It's a trade setup at the top or bottom of structure. That's a go-to setup. Learn to read between the lines and then capitalize on the trade. So that was a lesson for myself. Where I did get involved in the trade was here. If we just take a look at this and start drawing in this structure here, we start to get this first correction. So if we drop back to the 1 hour chart, we got that first impulse. This is just forming a flat sort of flag to then take this to the downside. Now ideally, this nature would have been a lot tighter, but because this was the first flag within the move, I'm happy to use a little bit of, discretion here and just take it for what it is. It is the first flag. It is a nice position to take, and then I was looking to take this on the break of the phase line. So we had this 1, 2, 3 pattern. I had this phase line drawn in, so I could take that on the break, and then simply pretty soon after that rejection here, I set my order below structure here. If we just neaten this up a little bit, I think it was here. Yeah, it was here because I got tagged in with this red candle here. So we got this phase line. We then ended up breaking. I think I had this at the time actually. After that bullish close, cool. So we got tagged in after that position at 9275, and then price was looking good. Price was looking good. Started to move to the downside a little bit. It was looking good at this point to completely break, right? And would I be sat here questioning things if price had completely taken off to the downside and replicated this price action? Probably not, which is why I'm not going to get too critical into, is that a trade that I should take? It's within my plan, so I took the trade. Pretty simple, pretty black and white, right? So I got triggered in after this. Price started to move to the downside and then started to trickle back up. So at this point, I knew that something had possibly changed. I'm not willing to close the trade here just in case, price does push to the downside. I've got my 1% risk locked in. So worst case scenario, I'm losing 1% of the trade. It's not a big deal. You move on. A few hours after being triggered into trade, I did get tagged out for the 1% loss. So it is what it is. I was happy leaving the position alone at this point and waiting to see if price push back up to these areas of value before getting short again. And that's pretty much what happened. So we got the first impulse, first correction formed. I took that trade. Price started to correct up at the top a little bit, form that double top, and then we started to drop to the downside here for a very nice position. So, definitely a mistrade for myself, definitely a go-to, and it's a shame that I did miss out on that trade, to be completely honest. It is my go-to setup. I was waiting for, a couple of days for this trade as well. So it is a shame, but it's something to learn from. And it can sometimes seem cliche when you say, I missed a trade, it's all about learning from it. It sounds cliche to a certain degree, but if you really dig into it and you really pay attention to, well, I'm not going to be making that mistake again, or I'll at least limit that as much as possible. What things can I put in place? That's really the key for me. So after this trade, I did take away a couple of different lessons, noted down my reason for this trade, psychology, trade analysis of the trade, like everything was good up until the trade itself. So just something to know for myself. But overall, that's the trade in itself. It's not a position that will take over and over again on NAS100 or have ever traded before. But you can see structurally and price action wise, it's pretty clean. It's pretty clean. It does behave a little bit different to currency, but it tends to be a lot more reactive erratic in price action, but very, very reliable when it comes to these patterns playing out very regularly. And you guys know that I do come from a pattern-based background where I do trade these structures. If you trade support resistance, that's a little bit different, but I trade this style and it suits me. So guys, I really hope you've enjoyed today's episode with the trade recap. So let me know down below if you want to see more of these in the future. I'll be keen to do these. You know, from my end, it's pretty simple to wrap up a trade recap. I'm pretty good at explaining like my analysis behind trades and why I missed out on certain trades or why I took certain trades. So I'll be keen to do a lot more of these in the future. So if that's something you will find value in, whether you're a beginner, intermediate, just let me know, and I can for sure start doing that in the future and get more of a discussion going. So it'll be good. But yeah, speak to you all soon. Have a good week ahead in the markets. Catch you soon.